Well, good afternoon, investors. Welcome to the mid-April 2024 bull session. My name is Mark Robertson. I'm founder and managing partner of Manifest Investing. I'm joined here by the magnificent mathematician of Mid-Michigan, Ken Kavula.
Hi, everybody. Mark's been
And
picking on me before the broadcast started here, so I'm gonna.
all in good fun. Not too bad. And also joining us here today, and horseback in Texas seems like a natural fit. Matt Spielman. Good afternoon, Matt.
Good afternoon. Just a kid from Flint. I have the official shirt.
Well, as a youngster, you were in Minnesota, though, right?
Well, I was born in Flint. I was born in St. Joe's. I grew up in Minnesota. We moved back. My folks got divorced, but I moved back when I was 5. So
okay.
I count Minnesota as home as well. I have multiple homes. That's a cowboy, you're always roaming around.
That's right. You got to go where the herd goes.
Yeah.
St. Joe's is now just a big empty lot, Matt.
Now,
nothing there at all except a big empty lot. So.
Yeah.
I did receive some subscriber correspondence that were worried that Ken was facing the wrong direction on his horse. Nothing is intended by that. Just
I am writing it backwards, aren't I?
it just
God, Mark.
it's not a hot tub. It wasn't intentional, and hey, I think you're just showing flexibility.
Yeah, that's it. That's it. Trick writing. Okay.
And then
where are the reins attached is what I want to know here.
It's an AI generated image. Sometimes there's a little problem.
Sometimes they have a little bit of problem with digits and things.
All right, so we're going to be covering.
Move on. That's enough of that.
We're going to be covering a lot of different stuff. Hey, the Dogecoin dog is actually back in the news today. On the day I was thinking about retiring him from the cover slide, so Musk has been writing about it. Anyhow, we're going to talk about the baby bulls. Just to spend a little bit of time with some smaller companies, even smaller than Ken is comfortable with, and talk about Buttonwood and talk about the recently concluded Getting Started series. Here is our weekly tip of the cap to Portillo's. And I think this one is very timely. Ken, as our ranking prom expert from the educational system, would you support Portillo's for prom activities?
Well, I'll tell you, Mark, that the school that I was principal of for so many years had a very unique kind of prom. So I guess my answer would have to be no. We never allowed them to know where the prom was going to be, and we never allowed them to drive to the prom. They used to all meet at the high school at around 6 in the evening, and that's where we took prom pictures while they were still all dressed. And then at about 7 in the evening, the buses pulled into the school parking lot, and they boarded big buses. They had no idea where they were going to go to, but that hour between 6 and 7 was full of almost, I would guess half the small community that we lived in was there every single year, just watching the kids do their thing. And it was great community, and it was a really safe prom. They had a wonderful time. And we never worried about anybody after the prom being a little bit under the weather and driving into a tree or something. So
yeah,
it was
absolutely
all around a really good thing to have. So no, I would have to say no, that we weren't going to take them to Portillo's.
I do
not
think
a big enough dance floor, I don't think. Okay.
I do think that taking your date to Portillo's would be pretty favorable to your budget as a young person.
Absolutely.
Compared to some of the other options. Hey, but this is our reminder that Portillo's is not a sponsor of this session, although they should be.
All right.
Here we go. Standard disclaimer. I see a lot of very familiar names. Welcome back. You guys all know the drill. No investment recommendation whatsoever is intended. This is entirely about illustrating and demonstrating some pretty cool stuff that we have learned over the last 8 decades from the modern investment club movement, specifically with respect to the discovery of opportunity, the analysis of said discovery, and the construction of a portfolio of those opportunities. Please do your own homework before making any decision. If we own something, we'll try to let you know. And we really do firmly believe that you are smart enough to form your own opinions about the things that you use in investing. And if you'd like copies of the slides, or if you have suggestions for future topics, we have a couple this week. There are 2 emails.
I think we should run this by the legal department, Mark, and just see if we could reduce it to "we are not the boss of you" and leave it at that, you know? Right.
I tell you what, Ken, as long as you have that top sentence in there, you can do whatever you want.
Okay, I would agree with you.
Courtney, you can ask Lori about that one when you see her next week or next month.
This next slide, folks, is a new slide, and we're trying to take some of the responsibility away from my wife. She is getting just way too many emails and phone calls, and she's asked if we can help out a little bit. If you want to be added to the Better Investing Mid-Michigan guest list, okay, then it's a real simple thing to do. Copy that URL that's in blue in the middle of the slide right there. Copy that down on a hunk of paper. It's really easy to remember as well. It's betterinvesting.org/chapters/mid-Michigan. And then if you go to that site and scroll down the page, and I put that in big red things with an underline under it, scroll down the page, you'll find this form. And all you have to do is fill in these 4 things on the form, hit subscribe, and you're going to be on our guest list. It's as easy as that. And then you don't have to go through any human being. You don't have to go through my wife. She doesn't have to take any action. And it makes it easy for all of us to get this thing going. It used to be when we started this, she would get 3 or 4 emails or phone calls a week, and she's getting somewhere in the neighborhood of 20 or 25 a week now, especially after we do a program like we did last week. We did a 4-class program, and she's been inundated. And finally, she came upstairs and she said, "You got to do something about this." So here's my solution, okay?
Hey, it almost feels like AI has arrived at the Mid-Michigan chapter. Good deal.
Yeah.
All right, here's a quick look at the stock market. The last several days have been ugly thanks to hotter than expected inflation, a few missiles flying around in not so good places, and I don't know, anything else that you want to blame. The stocks in general have backed off a little bit. The return forecast has gone up a little bit. You can see that the value line forecast is checking in at approximately 10%. So are the outputs from manifest investing also. So, Ken, any highlights, or what's your general outlook? 10%?
Well,
10%?
you know, I still think, Mark, that we're right in normal territory. I mean, there's lots of times when these green lines vacillate a little tiny bit above and below that blue line, and I think unless we go back a year and look at where they were then and how much distance there was between the blue line and the top of the green bar, I don't think we're in any serious trouble right now. All the talking heads seem to feel that this is a pause that might be a little bit beneficial for the market, in fact, just to blow out a little bit of the fluff that's been attached to some of the stocks. We do know that some of them had a really, really good run in January, February, March of this year, and they're not giving up that much, a lot of them, in this whole process. So I still think we're in an upswing in a pretty good economy. My pick at the stock panel last week, United Health, just blew the analysts out of the water today. The last time I looked, UNH was up about 7% today, just today, based on its earnings that it reported. So I might take over first place on this list here, Mark. I don't know. I'm primed for it. I don't think I've been there ever in my entire life. Okay?
You have, and you hover up there quite a bit. This is only, I think this is 1 or 2 days of results. So
don't
anybody hyperventilate over any of this.
Yeah.
I do find it fascinating that one of the best presentations in the history of investing again. Nice ends up at the bottom of the list, but
Puts you at the bottom. You have just a real knack of just moving to that spot right off the bat and staying there, Mark. So
He's drafting the whole group.
Are you drafting? Okay.
It might be.
The best marathoners, Mark, don't come to the front of the pack right away. So
That's true. Even Secretariat started out not until the Belmont started out behind the pack a little bit. All right, the 10,000 point level on the value line arithmetic index is actually in danger today of crossing back under. I didn't think we were going to go back this time, but those are the stocks that were selected by the panel on whatever day that was last week, Wednesday and Thursday of last week. And I think it's a good set of companies. I think
it's a nice mix too, Mark, of known names and unknown names. I mean, you probably know 3 or 4 of the names on the list, but you probably have no idea what 3 or 4 of them do. So it's a really, really good list to take a little bit of time and explore.
I will confess that as we played a tiny bit of tennis last night on the way home, Wendy was shopping on her phone, and she began looking at the tennis shoes from On Holding at the top of the list. Any guesses where the prices start, Ken?
I'm gonna guess they start above $100 a pair, don't they?
Yeah, and they probably average like 200. So
okay,
that's not our kind of tennis shoes, but
it's not a cheap shoe. No, I know that for a matter of fact. But
however, a few more shockwaves from Matt Spielman, and maybe we'll treat ourselves to some fancy tennis shoes at some point. There's some good companies on here. Take a look at them. I will point out, and I shared with Ken and Ann Manning that Ken had actually pointed out Inter Parfums and the potential 15 years ago on the Manifest Forum in an article. So it'd be kind of fun to look at how that one has done since then. All right, here's the groundhogs. It has been a turbulent few days for the groundhog also, and the groundhoggers, I should say. And a few people took some pretty good dives. I did. Ken continues on the list at 28, but there's a whole plethora. That's the word for the day. Plethora of clubs between 41 and 50. So they're all just kind of percolating there. And
I thought when I looked at this slide, Mark, that you had picked the wrong Bowman to show the portfolio of, because I noticed Rochelle Bowman is up there in 3rd place, but I went down and found Brett Bowman down the list here quite a bit, and I saw immediately why you chose his portfolio to display on the slide. Coming from 108th position to 33rd, Kim Butcher has a similar stock in her portfolio, and she went from 97th to 31st. So
yeah, we'd mentioned Coupang, I think I'm saying that right, last week as being very Korean centered, and it does have some presence in Korea, but that's a Seattle company. And it's an internet retailer.
I was surprised because when I listened to Kim talk about it, I was pretty certain that it was a Korean company. I mean, the name and everything else, but when I read what you put on the slide that's coming up, I want to shout out to Don Sheets. Don is in the Wolves Investment Club, and Don has been a member of this contest and a member of my club for 25 years or so. He's a veterinarian out of Saginaw area and lives today at the very tip of the Leelanau Peninsula out in Lake Michigan in a beautiful, beautiful home in Northport. And Don has made the top 40, and we're going to celebrate that at our next Wolves meeting, even if he doesn't stay there. We're going to have a big celebration for Don because he's a real good guy.
Well, in honor of Brett's portfolio, I'll make sure that we add these 2 companies to coverage. This is also a Joseph Carlson favorite, so we'll kill 2 birds with 1 stone. Here, Kim.
Mark, I have one more question before you get off this list. I want to know what is forcing your son-in-law down the list. He's dropped from 2nd down to 19th. That's a pretty big move down. Do you know what's forcing him down the list?
He's got an insurance-based ETF that took a hit. And Starbucks, and I'm trying to think what else. I don't think Coinbase took a hit, but yeah, it was a lot of damage in a couple of key stocks.
Okay. That's a big move. That's all.
Yeah, he says he'll be back. Here's Kim's portfolio again. Coupang helped out a lot. I do like Kim's portfolio. Hey, and Ken Ardelyx. That's doing a lot of damage to a bunch of us. But as I pointed out to Sean the other day, he was complaining about it being down 20 or 30% from its highs a couple of months ago. And then I pointed out, even down 30%, it's up 77% since Halloween or whatever last year. And actually, in our small companies, it's still near the top. So, I mean, it's a breather. It's a breather, and I don't see any fundamental or operating challenges that are causing the problem. The big jump up here in Coupang is what has propelled those two. It was actually higher even to where it's at right now. You can see that they spiked pretty good.
Yeah, and after reading this, Mark, this company is nothing like I anticipated it was. I've put it on a list to do a little bit more study on it, but it's really something that I might actually be interested in investing in. I was surprised.
Yeah, and I included this because people ask where we get some of our ideas from, and this is one that Kim has talked about. Following in the footsteps of Stanley Druckenmiller. A little bit of background on him you can see there. And this actually comes to us from Grid Capital. You can actually go read the entire article. But I'm with you, Ken. I had no idea exactly what this company's up to, and I want to understand better, how they compared to Amazon. What are they doing differently, etc. And so we'll have to compare notes after we take a closer look.
Mark, I'm going to just ask one question, and probably you don't have the answer at this point, but do we know the breakdown between the percentage of business done in the Asia Pacific region and the percentage of business done in the U.S.?
I don't off the top of my head.
Okay.
It has been added to standard coverage in the Value Line survey, so I'm sure that's probably in the little box. Maybe we take a look in a few minutes.
Okay, sounds good.
Here's a look at the company. Again, limited history. Certainly has burned through its startup period. Could be interesting. And Ken is more comfortable with 24,383 here instead of 83, apparently. More on that to follow.
Or 8.3.
Or 8.3, yeah. So it's a company worth taking a closer look at, certainly to understand and appreciate the investment opportunity. I'm not sure what led me to this one other than I liked the cartoon. Oh, I know what it was. Matt was kicking around some thoughts on graphene, so I wanted to go back and do some kind of hunting around. This is the portfolio we put together last June, seeking to identify companies poised to benefit from everything that's going on with the infrastructure. As we have learned over the last couple of years, these data centers are huge consumers of electricity. And I learned a little bit more about them. In fact, Dominion Resources put out a press release saying that they were expecting an incremental 85% in demand from these data centers over the next 15 years. Now, before you lose consciousness, that's about 4% per year. So if their native areas growing at 1 or 2%, they're actually saying that you could see an extra 4% per year as a result of all these data centers going in. And they point out that Northern Virginia was one of the first places that the internet began drawing some load on a commercial basis. So from top to bottom, looks pretty good. General Electric has worked out pretty well. Again, we scratch our heads over this graphene potential, and Cabot is only there because they produce a tiny bit of graphene. We're hoping for a pure graphene play. And here's the thing that Matt shared. So Matt, would you like to describe some of the research or some of the findings that you have kicked around here in the last few days?
Sure. Well, I happen to be moving forward in bite-sized chunks with George Gilder's, I guess I'm going to call it his last book, last one I know of, which goes from life after Google to life after capitalism, which doesn't mean going to communism or feudalism, but the idea of information being wealth as opposed to things. But chapter 7 of that takes a detour into graphene. and he names a few companies that he's been interested in, and so I went hunting for those. You can find those in Crunchbase. You can't find them in Yahoo Finance or anything like that. They're still pretty early stage. But the interesting thing with this particular article, and well, I don't know. I guess we need to start a graphene thing because it's on our internal chat. It's not in the forum. But this is from Georgia Tech, and so the gentleman there, which looks like he might be holding up a monocle and auditioning for the next Austin Powers villain, is actually a wafer of graphene. So when we talked about graphene last year, it was particles or flakes. That's what the do-it-yourself video. The guy got flakes, and he could insert that something like an aggregate that you would do like for concrete into different things and increase the strength of materials. This is now a wafer, and you can actually see through it, even though obviously you can't see through graphite. That was one of the things we saw as graphene would look sort of like a smoky gray. And so he's got a wafer. I'm going to guess that's 3 inches across, but the whole idea of the article is that they're actually making working semiconductors on this. And for reference, although you can't make a one-to-one comparison with this, but a 3-inch silicon wafer was state-of-the-art in 1972. So, you know, there's nothing that says the rules of making semiconductors with graphene actually follow or even use the same tools or same chemicals as silicon, but you can think about where they are versus where they might be investable or let's say public in a way that we could be exposed to them. They're probably a bit ways off. But the other thing is this is just one application. The applications we talked about before were very much along structure. It is well, I'm gonna say this wrong, so take it as an order of magnitude. It's 100 times stronger than steel. It is harder than diamond, which is otherwise the hardest known form of carbon. This is a single layer, a single perfect lattice of carbon atoms. But then you get to things like it is transparent, and it does conduct electricity in a way that might make it a room temperature superconductor. So there's all sorts of industries this could go to. This is just one angle. You know, it's still in the oven baking. We think it's going to look really good when it's ready, but it's not ready yet.
Yeah, and in fact, when we talked about this a little over a year ago, it was presented in the context of you would be able to, if you had a graphene-based connector and battery source or whatever, you could actually charge your car faster than you could fill it with gasoline. Right. Is the promise. So the transmission efficiency and the conductivity and all that stuff, in addition to the structural stuff that Matt's talking about. This is a pure company, but it's a private one still, Avadane. So we've got our eye on them, and they're still percolating along. I do not see that the private market price has even moved over the last year or so. We will continue to watch it.
We did a 2 or 3 month discussion in my private investment club about graphene because we were looking for a public company that we could put some money into to deal with this concept. I just want to say that if you don't know anything at all about graphene, the first thing you want to do is go to a good search engine and just type in what is graphene or what are the properties of graphene or something similar to that, because the amount of material out there telling you about this material is momentous. There's all kinds of documents out there to read and to take a look at. And I really think that it's such a different kind of physical thing that you need to get a basis in what it can do and what are its physical properties before you can begin to realize what the capabilities and what what it might be able to be used for. So do some really basic research, and it's so easy because there's tons of material out there. Academics have been writing about graphene for years, and they've been studying it. And I'm going to I don't remember, but I'm going to pull a number out of the air. I think they've been studying it for at least 25 years, if not longer. So it's a known quantity with known physical characteristics, and we're just now starting to be able to make it in quantity and to make it in shapes that are potentially useful.
Yeah, and that's the reason we added Cabot to this portfolio, because they do have some commercial generation of graphene. So
yeah, the other company that George Gilder mentions in the book is Universal Matter. That's partly founded by a group from Rice University here in Houston that had some breakthroughs in getting the size up, and they actually bought a UK company called, what is it now? Applied Graphene Materials in the UK, and so they have a demonstration plant that's supposed to be due up. It all says coming in fourth quarter 2023, but it's supposed to be a demonstration plant of producing at scale. So yeah, it's still kind of out of the lab, but not onto the stock markets yet.
interesting. We'll have to send you on a field trip.
Yeah, the next round of SPACs, I might get tempted.
Yeah, I guess, Mark, the point that I wanted to make is this is not a brand new material. This is not some brand new idea that suddenly has just, entered the world of science. This is a known quantity for a long time. It's just now, however, getting to the place where it can be used for something, perhaps.
Right. Yeah, it was an exotic material, like you said, Ken, hard to make, tens of thousands of dollars a pound, and now it's getting to the point where it's if you could make it more cheaply and more reliably, then you could start to apply its unique properties to lots of things.
Yeah, and the neat thing about it is that the raw materials that go into making it are ubiquitous. They're everywhere. So
Universal Matter is literally using garbage.
Yep.
What you would otherwise incinerate in a scrap yard, or even they're talking about ash piles, being able to take ash piles from other power generation and not only getting the graphene from it, but also the heavy metals that make it a pollutant.
Who knows? Maybe we're going to be mining our garbage heaps pretty quickly. Our landfills.
Don't launch that subject. That's a deeper subject for another day for sure. All right, Ken. Permission being requested to talk about the best small companies.
Is this the first time in April, Mark?
It's like only the second or third time since October. So
okay, you can do it. If this is the April talk, okay, yes.
All right, here's our 20 best small companies for this year. Some of these are huge compared to the companies we're about to talk about, but best small companies doing pretty well. That's all I'm going to say, because Ken thinks it'll jinx us. We are deeply indebted to Ty Hughes for a couple of those at the top of the chart. Even on this slide here, Ken, Ardelyx is up 70% since Halloween, so it's kind of hard to complain.
Yeah, but there's my favorite small company up there in second place, so I'm real proud of that one, Mark. Okay.
Yeah, that was our number one last year, and I noticed that Nova, one of my selections for the roundtable, has actually edged ahead of Technoglass today. So, and Shockwave, we're going to have to actually have a discussion about what to do, because that price is pretty well locked in by the acquisition. That's a Johnson & Johnson acquisition, right, Matt?
Yes, it is.
Yeah.
So that one will be kind of frozen, so we'll have to decide what we do with that. But I actually exited that my personal family club position in Shockwave this morning, and it felt good.
I sold mine a week ago, yes. Okay.
All right, so down at the bottom of this list, there's some interesting companies that we may actually give due consideration for the Buttonwood portfolio. I can't figure out Neogen. It'll be kind of interesting to watch how they navigate the choppy waters here over the next few weeks and months, but could be an interesting company to revisit in some detail. Globant will be covered by our session on the consulting firms, so we'll take a look at that. But InMode, of course, is in the middle of the Gaza situation still, and
Semler Scientific was hit hard by the government, by the Medicare people, and that is a a problem in the process of trying to come to some different solution. We'll have to see how it finally works out.
Is that
But
at all the
they were
two-step?
tapped out. Pardon?
That's not related to the two-step that United Healthcare does every year.
No, well, no. This is United Healthcare is going to bat for Semler. United Healthcare uh, processes a lot of the claims from doctors' offices that use the Semler equipment.
Okay.
And what Medicare did was eliminate the code for using that test from the coding. And if you don't have the coding, then you can't get the reimbursement for it. So there's a back and forth going on right now. It's supposed to be resolved sometime in April. We'll see, where they're trying to get the coding or a similar code put back in so that doctors can use the similar equipment, which is a lot cheaper to use than the traditional way of disease. So Semler's all in the middle of that right now, and it took a hit of about maybe 20-25% in its stock price, and now it's kind of just languished at this particular point now for a good month maybe. So it's a possibility that if the Medicare people put the code back in, that stock price will go right back up to where it was previously again. But that's a roll of the dice at the moment.
Yeah, and in the interest of disclosure, I probably own a dozen of these. I don't own any of the top three. So I'll cry in my beer a little bit over that, but I own probably 10 of the remaining set.
And I will tell you that I own in either a club portfolio or in my personal portfolio, Technoglass, MedPace. I just sold Shockwave, Green Brick, Western Alliance, Excel Services, InMode, and Semler, and Neogen. I own all of those in either club portfolios or my own portfolios.
So I guess we're guilty of eating our own cooking. By the way, I owned
We certainly are. Yeah.
I did own Western Alliance twice last year. So that first round trip was I was reminded of it with the tax filing yesterday, and that was a wonderful wonderful morning. Maybe we'll tell that story again sometime. All right.
We have a hand in the air, Mark, and I'm going to recognize Cheryl Smith. Cheryl, I can't unmute you. You have to unmute yourself, Cheryl. But if you do that, you can speak to us.
Hey, Cheryl.
And Cheryl took her hand right down. So that was what we call an inadvertent hand. And we're clear again, Mark. Okay.
All right. So I thought we'd spend a few minutes. We're about 30 minutes in. Just spend a few minutes talking about the MicroCap MicroCap Club. If you're not familiar with it, they are at microcapclub.com. It is kind of a membership club. You can actually qualify by submitting ideas and or paying them. So that's going on. The reason I got excited about this is I thought that they were publishing an index of 100 companies or so that they have covered, but they are not. They talk about turning over rocks, so that's what we're going to talk about a little bit here too. I'm still considering joining it just to find those ideas that Ken likes to bristle about from time to time.
I do think, Mark, that microcap investing is a whole different ballgame from small company investing. And I think you have to have a lot stronger constitution than I have, and you have to be willing to have a couple of sleepless nights, and I'm not willing to have any anymore. So
it is different, but I do think that you can at least extrapolate this notion of you can find a quality company in this mix, not just profitable, but also high quality. So,
and I went over the lists that you are going to publish with this set of slides for our folks to take a look at. And I'll tell you, there were 3 or 4 interesting companies. They weren't the 3 that you gave me to look at,
well,
but
that's
there were
for
3 or 4 interesting ones, I think, for next week. Okay.
Yeah, we're going to take a look at a list of companies generated by a screen at Y-Charts, but this just gives you a kind of a taste. and you can see that there's a number of tickers here that we have not really done anything with, in the past. There's some here that we have, including Semler, we were just talking about as being a company that's been kind of dinged up a bit here lately. But again, some of these are going to be really weird speculations. Some of them trading on other stock markets. So there's a variety of things that come into play as we look at these. But here is basically a screen done on Y charts where I went looking for. I think I went down to a market cap at 25, which I know just really thrills you, Ken. But a market cap up to their limit on the upper side for a microcap is 500 million. And so you see there's a bunch of 400s in there that Ken might be able to warm up to. And then I also
Well,
wanted.
Mark, we've looked at a lot of these that are in the 300 and 400 range.
Well, certainly.
I don't really get a little bit antsy until it moves down under 100 million, and then I start to get a little antsy about, what are we really looking at? What kind of history does it really have, if any? So. And I love Matt's quote from before the program started, that if it was a microcap for the last 8 years, it probably has 8 years in front of it to be a microcap as well. So,
well, I can remember watching Nathan's before Portillo's and being very frustrated that it just never seemed to go anywhere. And it has taken off here in the last few years. So Nathan's the 10th one down there. Would be definitely a Portillo's competitor. Therefore, it should be banished from this list. No, just kidding. Just kidding. But again, this is theoretically a list of companies that qualify as microcap that have positive earnings from continuing operations trailing 12 months. So you can see that here, an upward trajectory in EPS growth. And then I limited the price just because I wanted to take the pennies out of it to $10 and up. So this was the top 40. And like you said, Ken, Lakeland is no stranger to us. Semler, there's others. We've even talked about the Coyote stock Acme from time to time.
well, we've had Build-A-Bear on our possibilities list for, I don't know, for 4 or 5 years. It makes one of the initial lists. It never makes it to the final small company list, but we've looked at Build-A-Bear for quite a number of years too.
And then that one fits Matt's description of they just stay a microcap. And
yeah.
At least
and isn't there our friend Clearfield right there?
It is. I am going to follow my mother's rules. If I don't have anything nice to say, I'm not going to say anything about Clearfield right now. Hey, and this RCM Technologies is no joke. That's a pretty decent company. So I just threw a couple of these. In fact, we talked about this one fairly recently in the semiconductor arena, one of the test companies. But we just want to go down these lists. In fact, I ended up with about 160 companies in all. The next 3 pages are attached in the appendix to today's slide deck, so we'll make that available. Again, if you find one on here that really fits the higher quality characteristics that we like to look for, we would love to hear about it in the forum or by email to either one of us or Matt. So here's a look at one of the ones that's at the top of the list, Nortec Systems. This is not a stranger. This is a contract manufacturer operating out of the Minneapolis area, and they basically make a bunch of stuff that qualifies for medical device treatment and circuit board stuff for instrumentation. Reminds me a little bit of what's the Moog. Moog is the company that does a lot of work for on the industrial side. Reminds me a little bit of that one, but you can see that they cross a whole bunch of different industries, and obviously there's no track record with respect to quality or par. And this is just, for me, one of the reasons I included this one is we talk from time to time about what will actually happen to your price action or your price characteristic if you go through a bunch of years where your earnings are down here. And this one is kind of a poster child. The fact that the earnings are negative in all of those years means that this is going to be either a trading range or worse for a long time until they break out and they actually do this for a suitable amount of time. And it really is a poster child showing how going back negative and basically having another year zero crossover to positive earnings, you do that too many times and investors just get frightened and lose confidence. So this is one that I would not, even though it has 139 million in sales, Ken, just not too
Well,
terribly excited.
well, Mark, I don't believe in love at first sight. So I look at the sales line and I decide that this company's not for me. I'm committed to looking for growth, and I just don't think that those sales are showing me the kind of growth that is going to be something that I really, really want to invest in. Now, I do notice that you've put the trend line from 2020 onward, to 23, and that does show some growth there. If it can maintain that for another year or two, maybe we do have something. But for me, this is just too early stage, and I would not be investing in this particular company. I think I can find suitable peers or competitors that have better characteristics.
Yeah, and in fact, maybe we demonstrate that next week. You would throw this up against other contract manufacturers in a mini industry study and
Yep.
just see, and then the other thing with investing in companies like this, you really do have to look at, what is the probability? And again, it's a bit of a speculation that their financial strength will stabilize and bolster, increasing over the years, and will their earnings per share stability actually steady out? And it's just something to think about.
Yeah, I'm willing to take financial strength down into the 60s a lot of times for companies that I'm enthusiastic about that are very small, but I don't think I've ever invested in a company with financial strength down in the teens, Mark. So
Well,
uh,
they've got,
there's always a first time, I know, but
Ken, I look at that and I just say, well, there's a tremendous opportunity for improvement.
okay.
All right, here's Taylor Devices. That's kind of interesting. I think this is the one I was thinking about with Moog also, with the stabilizers for transportation and aerospace and defense type stuff. But these guys make basically commercial and industrial shock absorbers and across a number of industries, and kind of a similar story, although their earnings have arguably stabilized, and you can see the beneficial impact on the stock price because it has taken off a little bit. Um, if you believe that these 2 years belong in the picture, then the growth rate is probably single digits, and that's what Ken would probably do. Um, it just comes down to understanding the company, and I certainly did not study it in any depth. This is a cursory look at what might be possible, but just found it kind of interesting. So we're looking for more like this, but even better.
I really like the description of this company, Mark, because while it's long and has some heavy duty words in it, it's not using a lot of buzzwords. It's telling you all the kinds of things it does. I found it really interesting with they're making seismic dampers that ameliorate the effects of earthquake tremors.
Mm-hmm.
I think that's a really interesting product, and there's a lot of other products down there too. But this particular paragraph's not full of buzzwords where I finish reading it, I still don't have any idea what the company is doing. Again, the most recent years of sales are encouraging, and they have a little bit of a history of sales, but they've only sold $43 million worth of stuff in the most recent year, and they've been around since 2015. That means that boy, they must have started out really, really small. I don't know, but it's not growing very quickly for 1, 2, 3, 4, 5, 6, 7, 8, 9 years, and it's still not even up to $50 million yet.
Yeah, so I think we'll pass on this one too. So let's go to number 3. All right, this one, now this just warms the cockles of my heart, because you guys may recall an excellent presentation by Ken made for a roundtable a couple of years ago about these bolsas. Were they? They were, you threw the balls and
Bolas.
bolas.
Yes.
The name of the company was
Wrap Technology.
Wrap Technologies. In fact, the ticker symbol
That's
was
WRAP Technology.
not
Yes,
not RAP. Well,
yes.
it was a good story, and I think this one translates into that a little bit. Um, I am a big fan. Where's the word here? De-escalate. Maybe it's in the other. It must be in the description of basically de-escalating situations and trying to learn how not to shoot people when you're doing law enforcement. And these guys are basically operating around the globe, working with law enforcement to conduct very thorough training. Their product is differentiated in terms of the quality of the simulation and the 300-degree wraparound that they use for the simulation. So some interesting stuff that you can read up on. We'll show a little bit more about it. Ken likes this one because you can actually see a trajectory, and I agree with Ken. They have one negative year in the last several years. They seem to have come out of that a little bit and could be headed north. Time will tell. But this is a compelling trajectory when it comes to sales growth, and I do find them attractive.
I
At
think
least
one of
I
the
want to know
first
more.
things that I'm gonna dive into this one, Mark, and I think one of the first things I'm going to look for is, do they have any military contracts? They mentioned military in their description. I'm wondering if they're actually getting contracts from the government, and if they are, I think that's a very positive kind of a thing, especially with the. I'm going to go off in the deep end maybe, but especially in the way we conduct war today, where we're trying our darndest to only hurt other combatants, not to hurt civilians and everything else.
Right,
And
right.
I think that some of the things they're talking about might play right into that, and maybe become part of the training that's done for our military. So that's one of the first questions I'm going to ask myself, and then try to find the answer to it as
I
I read through stuff.
I do know that that is a very recent, within the last couple of weeks, investor presentation that's at the bottom of that page. And again, I didn't study it in any depth yet, but there were images of military personnel in that, Ken. So um, I do believe that
I,
they are doing some of that.
I do like the bottom right-hand corner of that graphic there, 95% plus customer retention.
Hmm.
So evidently their customers like what they're getting when they purchase things from this company. But again, this one's possibly good for a deeper dive. So I think I'll be adding it to my short list here. I got 5 stocks on that short list now, Mark. I can't do many more than that. So.
Stabilizing earnings, I like that. Here's that word, de-escalate. I'm personally a huge fan of law enforcement learning to de-escalate better, and that's all I'm going to say for now. Um, this just has a lot of appeal. I do. Ken is worried about municipal budgets. I get that. I think that some of the kind of the global changes that need to happen in our law enforcement systems are going to require a retrenchment and a lot of retraining. I have friends that are in this realm that talk about repopulating some of the law enforcement agencies and making sure that they're properly trained. So I think there are some real demand side drivers here, and I think that some real necessary things need to happen. So anyhow, I think we're going to go ahead and add. It's only 162.50. We're going to add it to the Buttonwood portfolio, and just for no other reason to keep track. And I told Ken I can go back and look at some investments made 20 to 30 years ago that we still have, where we threw a few $100s. And in one case, it was Morningstar, and of course, Morningstar was not a really early stage company even at that point in time. But the appreciation on that over the years, I just kind of takes my breath away every time I open that brokerage statement. So these type of companies can be quite compelling, and I wouldn't be disappointed if the Buttonwood portfolio ended up somewhere around 16, give or take, a little bit more ambitious on the growth side. And Ken, your assignment for next week is to find that core company. You can engage as many members of this audience as you need to find that
Well,
boring. core
I'm not
company.
guaranteeing anything for next week, Mark, but I'll do my best. Okay. I think that this particular company is definitely non-core, and I think once we get this portfolio fleshed out, one of the earlier things we want to do is to kind of just come up with a real rough core, non-core percentage to make sure we're not leaning too heavily into the speculative realm. I don't think we are, but I think we should demonstrate that that's part of planning a portfolio, and you should keep that in mind.
Yeah, and I don't see any sector that we should avoid at this point. As we convert this cash to actually being deployed in the sectors of the portfolio,
Yeah.
maybe a little bit reluctant on more discretionary, but when I say little, I mean very little. And then, of course, there is no large company slice here. I'm good with that as long as the numbers add up. I do want us to be sufficiently assertive
Yeah,
with our
and
investment.
while there's no sectors we should avoid, I don't also think there's any sectors we should go racing after either.
No,
Especially, I don't think we need to worry about the sectors that aren't represented at this point. We have 6 already. That's a pretty good distribution of a smallish portfolio, and I think that I don't want to say we should ignore the sectors as we flush this portfolio out, but I think we can basically pretty much ignore that graph until we get it all the way flushed out and watch our companies start to grow a little bit.
sure. So anyhow, that's the current status of the portfolio. We will deploy another 162.50 into that company there, Vertra.
We have our friend from Gross Eel suggesting that we should look at energy. So
Yeah,
that's Len Douglas wants us to take some look at energy. So
maybe we need a triple leveraged ETF in energy there, Ken. I'll leave. I'll leave you.
I don't know what he's saying. He's going .tpl, and that's Greek to me, Len. So you'll have to explain that a little bit.
Texas
Plus,
Power.
Mark understands it. Oh, Texas Power and Light. Okay.
Texas Pacific.
Yeah, Texas Pacific Land. That's
Land.
much has been said of it.
Oh, that's the one that Len took the big bath on just recently, isn't it?
Yeah, it had a
Didn't that
bad
have
day.
all kinds of real problems just recently? Okay.
All right, so we can. I'm with Len. I think that energy should be looked at, especially in a. I'm not.
I'm laughing because Len is saying that he's back to break even on that stock. Okay.
Hey, Texas Pacific was the #1 performing Barron selection from, I believe it was 3 years ago. So they have had their moment in the sun. No pun intended. All right. Anything else on this, Ken?
No.
Okay. Thought we'd close out with just a quick reinforcement of the projected return on value calculation versus the projected annual return. And thought we'd use a community favorite, Ulta Beauty. Ulta Beauty is a company that's in many of our portfolios. Gotta like that up straight and parallel situation developing there with the one COVID exception that we've learned to kind of look away from. But we're talking double-digit growth on sales and earnings, a par up here pretty nicely. This is a welcome component of many of our portfolios. I think you own this one, don't you, Ken?
My wife does in her IRA, right?
Okay, so what we're talking about here is the comparison between the bottom line of any stock study, that would be the return forecast known as the projected annual return, and comparing it versus this projected return on value, which is just an alternative measure that we looked at over the last couple of years for establishing a return forecast that does not involve PE ratios. And what it allows us to do is to think about the company as a business, throwing in all of the liabilities, the cash in their wallet. So you're literally thinking about the value of the enterprise versus what they generate in operating income. And extremely important to make the distinction, because very few people do this. We're using the projected operating income just like we do for everything else on a stock selection guide. So those numbers in general do compare very closely. within a few percentage points, and certainly is true here. So here is the, go
I've
ahead,
had
Ken.
questions over the last couple of years, Mark, about why would you do this? And my answer has always been, well, you know, it's sort of like sitting in a classroom when you're doing a complicated problem or writing a complicated paragraph or doing something that you're not completely familiar with. It's really nice to have the teacher walk up to your desk and say, "That's okay, you're doing fine." And that's what Prove is doing for our studies a lot of times. It's just a validation that these very traditional analysis that we do based on the balance sheet, that those very traditional balance sheet analysis that give us a par value, that they're just fine. And when you get a Prove that's as close to the par as these two numbers are, then I have a lot of confidence that the study that was done is pretty decent. That's why we want to do Prove. And Mark's going to show you it's really a very, very straightforward calculation that even though it's not being calculated for you all the time, you can pull the numbers off a value line sheet without a whole lot of trouble.
Yeah, so here's a quick look at the calculation, looking at the two side by side. And I think you meant income statement. The income, it's basically an income
What did I
statement.
say?
You
What
said
did I
balance
say,
sheet.
Mark? Oh, I always say balance sheet. I don't know why. It's an income statement. You're right.
Yeah, and in fact, I would point out that the enterprise value, the nature of the stuff on the right, also includes more balance sheet, which is a pretty good idea. So the numbers you need are pretty straightforward. The current sales, the whatever sales growth forecast you choose, you can see those two numbers are here. That is actually what generates the projected operating income, because you take the 5-year estimate of sales, and here's the math. Basically, the trailing 12 months of sales times this growth rate to the 5th power. That's just basically making it a 5-year estimate. And then we also peel off, for the projected return calculation, this projected operating margin. And again, that is on display here for this particular company, but we do watch the operating margin and keep in mind how that looks versus industry. And it is a real interesting characteristic for many companies. So in this case, that leaves you with approximately $3 billion in projected operating income. Okay, so the projected is the part that's different than you'll see in academic literature out there. That's one of the differences in this calculation, which is based largely on the work of Joel Greenblatt. The second major difference is we use total liabilities instead of long-term debt. This was a watershed discovery when we figured it out. These three components are what build up to the enterprise value. They're shown down here. So again, the market cap of the company, which is basically the stock price, only in dollars. So the market cap added to the total liabilities, which is basically everything, current liabilities and long-term debt, anything else that might roll into there, and then corrected for the cash on hand. This can become a pretty interesting thing to keep track of when you have a company with an inordinately high amount of cash on hand. So those three basically combine to form the enterprise value. Dividing this 3182.5 by this 22,599.3 gets you this number. And again, we use it as an audit function. That's the first use of it, because because the PE is not on the right hand side. It basically becomes an audit and a nudge that if this number gets too high on the left hand side, maybe knocking down the PE is in order. I wouldn't do it for this difference, but if I got 14 here and 24 here, I might examine very carefully what to do with my PE expectations. Fair enough, Ken?
Fair enough, and it works in reverse also, Mark, that if the Prove number is significantly higher than the par number, it might give us a reason to become a little bit more aggressive in choosing the PE value too.
And the other reason, and in fact what actually drew us into this in the first place, is that for some early stage companies, and you could argue that this is one of them, back here a couple of slides, fairly early stage. We did it, however, for Tesla and Amazon. And back in the days when it didn't have a PE, or you went to your club meeting and the person said the PE for Amazon is 128 and everybody guffawed. and chuckled and what is it, chortled. When a company is early stage and it doesn't have a PE or it has one of those 3-digit PEs, that's not a PE. So you can actually do this methodology for a company before it becomes PE enabled. So that's the other reason for doing it, in addition to what Ken said in terms of audit function.
Maybe, Mark, a great example for us to put in a future bull session would be this exact same slide using a company that has an quote outlandish unquote PE value. Maybe something like some of these really fast growers that we have right now that are carrying PEs of 45, 50, 55, 60. Maybe showing where the proof comes down with those things in a reasonable analysis would be a really nice thing for us to look at.
Good idea. Somebody suggest a company.
How about NVIDIA?
There you go. Well, we have actually done that exercise for NVIDIA. So yeah, we can reinforce that. So here, the other thing that as Ken and I talked about this, even in the early formation of the concept, we were kind of intrigued by how few numbers are actually involved and how much confidence we have in the numbers being tossed around. So what I've shown you here is off of a value line sheet. Again, you can pull the current trailing 12-month sales. You can also do it from I don't have the quarterly earnings box on here, but you can add up the 4 trailing quarters, however you want to come up with this current sales number. The operating margin is shown right here. The sales, you could use 8.5 instead of the 10.5 that we used before. But again, those 3 numbers give you all you need to form that top half, the projected operating income. And with respect to the bottom, the first 2 numbers, the first one and the third one, market cap is right here. Cash assets is right here. You could peel them off of a different source, but those 2 numbers are pretty good. And then the one that's a little more elusive, sometimes it's in the capital structure box, the current position box, but not very often. And sometimes it's kind of awkward. We obviously pull the numbers straight from Y charts, but we've always considered Morningstar to be a fairly decent source for the total liabilities. And you see that here. So again, you're peeling just 3 numbers off and injecting them into the formulas. One of the things that I wanted to do here to illustrate, if you don't get the exact same number, we used 8.5 here for sales. We used 17 instead of 17.2. So we did get a slightly different number for the projected operating margin. I would call that 3 billion. I would call that number 3 billion, in this type of analysis. And then for the market cap, there's a big difference here. This 21.9 isn't wrong, but it was right back nearly 3 months ago, or actually this is actually a week ago, when the stock price was up at 453. The stock price is now at 422, I believe. So it's gone down quite a bit. So this number's changed quite a bit. So that actually dented the projected return on value. All right.
I think you just made a point. I think that's important, is that we know par moves along with stock price, and indirectly prove moves along with stock price as well, doesn't it?
Sure. It's gonna. When the market cap went down, the return forecast went up. So
yep.
You can see that here, up to 14 from 11.5. So again, if you do this calculation later this week and you get 13, that's not wrong, or anywhere in that realm. Don't be too fussy about it. But again, what I would point out is these numbers are pretty steady. And obviously the one that probably affects it among the most is right here. Be careful with your sales growth estimate. That's true for any stock study. And hopefully that helps a little bit. So Joe, hopefully that gives you some material to look at and think about as to where the numbers come from and how they are punched out in the calculation. This actual display is out there in all the equity analysis summaries that we put out. So you can see the numbers that we used. Anything else before we close up shop, Ken?
I think it's been a good bull session today, and I think that we want to remind folks again that Mark has attached in the appendix to these slides the rest of that small list that we were talking about. There's 3 pages of it, lots of tickers for you to take a look at if you are so inclined. And remember, if you want copies of the slides, it's Mark R at manifestinvesting.com, and he'll send you copies of the slides, or you can get them on our YouTube channel also. Just go to Manifest Investing on the YouTube site. If you're not a subscriber, please subscribe. We'd love for you to subscribe. And at that point, then you'll see all the things that we've been doing for the last 12, 13, 14 years. And this will be on there momentarily. Mark will have it up. He puts them up pretty quickly, so it won't take 24 hours. It'll be up before then, I know.
As long as I remain vertical and conscious. All right. This is just a tease. We're going to talk about the IT, software and consulting services industry. That's just our reminder that that's up and coming. A quick look at the eclipse. And there were actually people that flew from Dallas to Detroit along the line of totality, which I thought was kind of interesting. Interestingly enough, air traffic control didn't let them do it. So kind of interesting to read more about that in days ahead. There probably were some upset people that paid $1,000 for those seats that they didn't go exactly as expected. And that's pretty much it. So Ken, are you going to tell us the ones you peeled off here? I noticed this one, I love this one. Did you remember that one, Ken?
I certainly do. That was a Pat Donnelly choice quite a while ago. I don't know how it's been doing recently, but that's a Pat Donnelly choice. Mark, I have not had time to look at the extra lists yet, so I can't comment very much on them at all.
You had 5 from the original list that you found somewhat attractive?
I found 5 from the original list that I found somewhat attractive.
Are you going to text those to me in private, or you?
No, I'm going to keep them secret for now. All right. That way you're not going to tell me that you saw it first, okay?
Oh, I wanted to get out there with a full-blown study so that I could claim it first. Yeah, but all right.
To be unveiled at the Bink panel.
Oh, there you go. There you go.
Say it again, Matt.
To be unveiled at one of the Bink panels.
At one of the Bink panels, right? We'll keep it in my pocket. We have a stock panel coming up in the middle of May at the convention, Mark, so I'm going to need a couple of ideas to surprise people with there, you know?
Sounds good. All right, well, I hope you've all enjoyed our baby bulls, and we'll have some fun looking for more. Now, Ken likes them a little more mature, but
I would like my horse to be the right direction next time, okay?
I will be more careful.
All right.
That was not intentional, although I will say that my wife liked it. All right, so that's all for now, unless you've got anything in the hopper or.
No, I think we're all set. If you're anywhere near southeastern Michigan, Mark and I are going to be down at a in-person session in southeastern Michigan at the Troy Community Center. So if you would like to come in, Saturday morning, starting at around 9 o'clock. It's just going to be half a day. We'll be finished by about noon or 12:30. And come on down and say hello. We'd love to involve you in the discussion. We don't know quite what we're doing yet, but we'll be doing something that we think is educational and entertaining, we hope.
And then also, it's now 2 weeks out, but the next roundtable will be an interesting session looking at launchpad investing. Got a feeling to prove my comment to effect.
And that will be on the 30th of April, exactly 2 weeks from today, right?
All right. So with that, everybody, good investing out there.
Good afternoon, everybody.
Thanks for being here. Thanks, Matt.